There's a moment right after you close a trade. The chart fades, the numbers stop moving, and all that's left is the story you start telling yourself. Maybe you whisper, I knew it. Maybe you sigh, I should have waited. Maybe you tell yourself you almost got it right. That story feels harmless, but it's not. It's the beginning of self-deception. It's the quiet moment where truth slips away and illusion takes its place. Because every trader lives between two worlds, what they believe they know and what they actually knew when they made the decision. The space between those two truths, that's where hindsight bias lives. It's not loud, it doesn't shout, it whispers. It hides behind confidence, it disguises itself as wisdom. And if you don't see it for what it is, it will trap you in the same cycle over and over again. This episode isn't about charts, it's not about setups or strategies or secret indicators. It's about the story your mind tells you after the trade is done. It's about the part of you that wants to feel certain even when the market is chaos. Because until you learn to see through that story, you'll never see the truth behind your own decisions. Welcome to Mind Over Markets. This is Hindsight Bias, and reviews get honest feedback. Let's begin. Have you ever looked back at a trade and whispered to yourself, I knew it. I knew it was going to fall. I knew I should have waited. I knew that entry was wrong. You say it with quiet confidence, as if somehow you had seen it coming all along. But deep down, if you're honest, you didn't know. You hoped, you guessed, you reacted. And now, because the outcome is visible, your mind rewrites the past to make sense of the pain. That's the illusion. That's hindsight bias. The most subtle, most seductive lie your brain tells you after every trade. It makes you believe you're smarter than you were. It convinces you that your judgment was almost perfect, that you almost got it right. And that illusion is what stops you from truly learning. Because when you think you already knew, you stop asking why. You stop looking deeper. You stop reviewing the trade with honesty. Most traders think they're learning from experience, but in reality, they're learning from edited memory. Every loss gets rewritten into a story that feels safe, and every mistake gets softened until it sounds like wisdom. The truth is, hindsight bias isn't about being wrong or right. It's about how your mind protects your ego. You see, your brain hates uncertainty. It hates chaos. So when the market moves against you, it hurts not just financially, but psychologically. It threatens the story you tell yourself, I'm a good trader. I understand the market. I can predict what's next. And when that story cracks, your mind rushes to repair it. It looks backward, reshaping your memory of the trade. It whispers, I actually knew it would happen. I just didn't follow through. I saw the sign, but I ignored it. That inner voice is comforting, isn't it? It lets you feel in control again. It gives you the illusion of foresight. It turns a painful mistake into a moment of near mastery. But it's also the reason why your next trade will probably follow the same emotional pattern. Because if you keep rewriting the past, you'll never see your patterns clearly. If you keep pretending you knew, you'll never admit what you didn't. And without that admission, there's no growth. Hindsight bias turns your review sessions into a mirror that flatters, not reflects. You start to think you're improving, but you're only polishing the same illusions. You say things like, I just need to trust my gut more, or I should have been more patient. But those aren't lessons, they're stories. Stories your mind creates to avoid confronting the uncomfortable truth you didn't know. You didn't see it coming. You acted from a place of uncertainty, and that's okay. That's what trading really is. Trading isn't about knowing. It's about managing not knowing. It's about staying humble in the face of randomness. But hindsight bias makes humility impossible because it convinces you that you were right all along. Think about your last losing trade. If you're like most traders, when you reviewed it, your mind tried to reconstruct the logic. I should have noticed that divergence. I ignored that resistance zone. I was emotional that day. But you see, that's the bias speaking. You're not remembering your decision as it happened. You're reconstructing it using what you know now. In that moment before the loss, your information, your confidence, your emotional state were all different. You didn't have the hindsight clarity you have now. But the mind hates to admit that it was blind. So it changes the story. That's why so many traders feel like they're one insight away from mastery, yet keep repeating the same emotional cycles. They're not learning from the past. They're repainting it. And every time you repaint your past, your next decision becomes just a little more delusional. You start to believe your intuition is sharper than it really is. You begin to think your near misses prove your intelligence, not your bias. You confuse confidence with clarity. Hindsight bias is invisible because it feels like honesty. When you look back, you truly believe what you're saying. You're not lying consciously. Your brain genuinely convinces you that you knew. That's what makes it so dangerous. It's like driving through fog and believing you saw the road clearly the whole time. And when you believe that, you don't slow down for the next curve. Every trader wants honest feedback. But the first step isn't from others, it's from yourself. And you can't be honest with yourself if your brain keeps rewriting the truth. That's the paradox. The more intelligent you are, the more elegant your self-deception becomes. You'll find ways to justify everything. You'll turn every mistake into a lesson learned, but a lesson learned for the wrong reasons. And so the pattern continues. Real honesty in trading starts when you say, I didn't know. I thought I knew, but I didn't. And instead of shame, you feel curiosity. Instead of anger, you feel awareness. That's where transformation begins, not in pretending to know, but in daring to admit you didn't. Because only then can you start to see. Only then can you start to understand the invisible patterns that control you. And only then can you start trading not from ego, but from truth. The human mind has one obsession to feel certain. It craves patterns. It needs order. It wants the comfort of believing that things happen for a reason, and that you can see that reason clearly, even if only in hindsight. But the market doesn't care about your need for order. The market moves through chaos, random fluid, impossible to predict, with absolute precision. And when your brain meets that chaos, it panics. It looks for a story to make sense of it. That's when hindsight bias steps in quietly, effortlessly. It reconstructs the story of your trade. It takes scattered memories and fills in the blanks until the picture looks coherent again. It's not reality, it's reconstruction. Neurologically, it's called memory consolidation. Each time you recall an event, you don't replay a recording, you rewrite it. And each rewrite blends the past and the present together. Your mind inserts today's knowledge into yesterday's memory. So it feels like you always knew. You didn't. But your brain doesn't want you to feel lost. It wants you to feel in control. That's why hindsight bias isn't a flaw, it's a defense mechanism. A psychological reflex designed to protect your ego from uncertainty and shame. Because the truth is, uncertainty hurts. It feels like vulnerability. It feels like failure. And in trading, failure feels personal. Every loss whispers, you're not good enough. Every wrong prediction stings the identity you've built. The identity of someone who understands the market, who sees what others don't. So instead of sitting with that discomfort, your mind rewrites the story to protect you. It whispers, I knew it all along. I just didn't execute. I ignored my system. It feels like self-awareness, but it's actually self-deception wearing honesty's mask. This is the moment where traders get stuck in a loop of partial truth. They admit the mistake, but not the ignorance. They see the symptom, but not the root. And so their reviews become rituals of justification. a comforting exercise in storytelling rather than an investigation into truth. You see, the mind's job isn't to find truth, it's to preserve identity. That's the hard part. Because as traders, we think we're rational. We think we're analyzing data, probabilities, price action. But beneath that surface, there's something older, more emotional, more primal, the need to protect the self. The self that says, I am competent, I am smart, I can handle this. When the market proves otherwise, the ego can't take the hit. So it bends reality just enough to stay intact. It turns chaos into narrative. It replaces I don't know with I knew. And that's how hindsight bias keeps you emotionally safe, but intellectually blind. Think about how you review your trades. You pull up the chart, you see the outcome, and immediately your mind connects the dots. It feels obvious. The setup, the signal, the price structure all seem crystal clear now. You nod, you make notes, you write, next time I'll trust the pattern. But the truth is, before the outcome, those dots weren't connected. They were floating in uncertainty. There were multiple possibilities, and you chose one. That's the reality of trading, not certainty, but probability. And hindsight bias erases that complexity. It simplifies the past into a straight line as if everything was predictable. That illusion is comforting, but deadly. Because when you believe the market is predictable in hindsight, you subconsciously expect it to be predictable in real time. And when it's not, you feel frustrated, angry, emotional. You think, how could I miss that again? But you didn't miss it. You just forgot how uncertain it really was. This is how the bias feeds overconfidence. You start believing that your skill is greater than it truly is. You think, next time I'll catch it. And so you size up, you take bigger risks, you act with conviction, not awareness. And that's when the market humbles you again. Each cycle reinforces the illusion. Almost right feels like progress. But progress built on illusion always collapses. The real work of trading psychology begins when you start to notice these patterns inside yourself. Not the patterns on the chart, the patterns in your mind. How you explain things, how you justify them, how you turn every event into a story where you're the main character who almost knew. That almost is your comfort zone. It's where the ego hides. It's where learning goes to die. So if you want to grow as a trader, you have to break that cycle. You have to question the story your mind tells after every trade. You have to pause and ask, is this what really happened, or just what I want to remember? That single question asked with honesty can change everything, because awareness doesn't begin with knowing. It begins with noticing. Noticing the subtle ways your brain rewrites the past. Noticing the emotional pull toward certainty. Noticing the part of you that prefers comfort over truth. Every trader says they want to learn, but few are willing to feel the discomfort that real learning demands. Because to learn, you must first admit that you didn't know. And that's terrifying, but it's also liberating. When you can say, I didn't know, you strip away the illusion of control. You make peace with uncertainty. You stop fighting the randomness of the market and start aligning with it. That's what true growth looks like. Not perfection, not prediction, but presence. Presence with your emotions, presence with your uncertainty, presence with the uncomfortable truth that you are and always will be a student of probability, not a master of prediction. And that's okay. That's what separates the trader who survives from the trader who disappears into frustration and denial. When you finish a trading day and you sit down to review your charts, what are you really looking for? Are you studying your process or just searching for comfort? Most traders think they're being analytical. They pull up their journal scroll through the entries, draw lines, highlight setups, write notes about what they should have done. But deep down, that review isn't about truth. It's about reassurance. It's about trying to feel better, not trying to see clearer. That's the quiet tragedy of most trading reviews. They're not reviews at all. They're emotional editing sessions. Every word you write, every chart you annotate is filtered through the lens of hindsight. You already know how the trade ended, and that knowledge poisons the purity of your reflection. You think you're dissecting decisions, but you're actually defending them. You think you're learning, but you're just rewriting. This is where the ego hides best inside the illusion of self-analysis. It sounds noble. It looks disciplined. But beneath the surface, your brain is sculpting a version of the past that feels safe enough to live with. You remember the moments that fit your story, and you forget the ones that don't. You highlight the clues that confirm your skill, and you ignore the signals that expose your uncertainty. That's not review, that's revision. And until you see that difference, your trading psychology will stay trapped in the same loop, one part learning, two parts justification. So how do you break it? How do you step out of the fog of hindsight and see what's really there? It begins with one principle: separate the past from the present. When you review a trade, you're not trying to predict the market again. You're trying to reconstruct your mindset at that exact moment. That means you don't ask, what should I have done? You ask, what did I actually believe at the time and why? If you can answer that honestly, you'll start to see how your perception shifts under pressure. You'll notice how clarity fades when money is on the line. You'll begin to map the emotional fingerprints of your decisions. That's how you learn, not by replaying the chart, but by replaying yourself. When you start recording your thoughts before a trade, you're not just journaling. You're capturing truth before the bias can edit it. Write it down. Speak it out loud. Record your screen if you must. Because once the outcome is known, the mind begins to distort the memory instantly. Every second that passes after a result appears is another second your ego has to rewrite the past. You can't stop that bias entirely, but you can outsmart it by leaving evidence. Time-stamped thoughts, screenshots, voice notes of your reasoning. They become mirrors that the mind can't polish. When you come back to review later, don't ask, was this trade good or bad? Ask, was this decision aligned with the information and emotion I had at the time? That's where honesty lives, in context, not in conclusion. Because a good trade can lose money and a bad trade can make it. But hindsight bias blurs that truth. It makes you judge every decision by its outcome. It trains you to believe that profit equals skill and loss equals failure. That's how overconfidence and self-doubt take turns controlling your entire emotional cycle. You win and your ego says, see, you knew it. You lose and your ego says you should have known better. Different results, same illusion. That's why real mastery isn't about outcomes, it's about awareness. Every honest review is a conversation between who you were and who you're becoming. If you can hold that conversation without judgment, you'll start to see the truth behind your behavior. You'll notice the fear that pushed you in early, the greed that made you hold too long, the doubt that whispered when you hesitated, the relief that disguised itself as discipline. Each of those moments tells you something profound, not about the market, but about you. Trading psychology isn't about eliminating emotion. It's about understanding it deeply enough that it no longer controls you. But you can't understand what you refuse to see. And hindsight bias blinds you with the illusion of wisdom. It turns real pain into shallow insight. It gives you phrases that sound intelligent. I need to be more patient. I should trust my system, but those are surface level truths. They sound right, but they don't change behavior because they're not rooted in reality. They're rooted in revision. So start asking better questions. Not what did I do wrong, but what was I feeling when I decided that? What belief was I defending? What fear was I avoiding? Those questions cut through illusion. They expose the real mechanics of your mind. And the moment you see those mechanics clearly, you become free from them. Because awareness is the antidote to bias. The moment you notice the distortion, it loses its power. That's how self-honesty begins. Not through discipline or motivation, but through awareness. You can't be objective about markets until you learn to be objective about yourself. And that objectivity doesn't come from data, it comes from courage. The courage to look at a losing trade and say, I didn't know. The courage to admit that your mind edited the memory. The courage to stop pretending you always saw it coming. That's what real trading psychology looks like. The humility to face your own illusions and the patience to replace them with truth, one review at a time. There comes a moment in every trader's journey when awareness alone is no longer enough. You've seen the bias. You've watched the mind rewrite the past. You've felt the discomfort of realizing how easily truth bends under the weight of ego. Now the question becomes, how do you live differently? How do you review without distortion? How do you build a mind that can see clearly even when the outcome is already known? The first step is humility. Humility isn't weakness, it's clarity. It's the quiet acceptance that you are not the market's master, you are its student. Every trade is a lesson wrapped in uncertainty. Every chart is a mirror reflecting your inner state. Every loss is a reminder that prediction is an illusion. Humility means surrendering the need to be right and replacing it with the desire to understand. When you approach your reviews with humility, you stop trying to prove something. You stop searching for validation. You begin to see your journal not as evidence of competence, but as evidence of curiosity. Humility creates space for truth. And truth, even when painful, is the only data worth keeping. The second step is structure. You can't outthink your biases with willpower alone. You need systems that make self-deception harder. That's why professional traders treat journaling like science, not therapy. They record everything, their reasoning, their emotions, their expectations, before, during, and after every trade. They write or speak in real time, capturing their mindset before the mind can edit it. They use time-stamped notes, screenshots, video logs, objective metrics, because they know memory is clay, not stone. And once the result appears, the shape of that clay begins to change. If you want to see clearly, you have to anchor your observations in real time. That's not just discipline, that's protection. Protection from your own brain. The third step is external feedback. You can't always see your own distortions. Sometimes you need another mirror. Find someone who will review your trades without bias, a mentor, a trading partner, a coach, someone who doesn't care about your ego, only about your process. When you expose your decisions to another set of eyes, you invite accountability. And accountability destroys illusion, because illusion survives only in private. Once spoken out loud, it loses power. When you explain a trade to someone else, you start to hear the inconsistencies in your own story. You realize how much of your logic is just rationalization. And that realization, uncomfortable as it is where growth begins. The fourth step is language. The words you use during review shape how you think. Most traders say things like, I should have, I knew I was right, but every sentence centers the self. It's a story of identity, not analysis. Change your language and you'll change your relationship with the market. Replace I was wrong with the probability didn't play out. Replace I knew it with I expected, but I didn't know. Replace I should have with next time I will test. Each small shift moves you from ego to process, from shame to curiosity, from reaction to awareness. Because the goal of trading psychology isn't to be emotionless, it's to be emotionally honest. And emotional honesty begins with the words you choose. The fifth step is stillness. After every session, before you open your journal, pause. Don't jump into analysis while your emotions are still loud. Let the noise settle. Let the mind breathe. In stillness, truth becomes visible. The reason hindsight bias thrives is because you rush to make sense of the chaos. You need a story to calm the discomfort. But if you give that discomfort space, if you sit with it without reacting, the need for the story fades. And what remains is insight. Stillness doesn't mean doing nothing. It means creating distance between event and interpretation. That distance is where objectivity lives. It's where you stop identifying with every trade and start observing them like data points in a long experiment. That's how professionals think. They don't cling to outcomes. They observe patterns. They see themselves as part of the data, not above it. Because the moment you separate me from my trades, you gain freedom. Freedom from guilt. Freedom from pride. Freedom from the illusion that every trade defines you. And in that freedom, you can finally review with honesty. You can look at a loss and say, this was part of the game. You can look at a win and say, this doesn't prove anything, but it helps me understand. That balance between humility, structure, feedback, language, and stillness is what turns hindsight into foresight. Because when you learn to see without the lens of ego, you begin to notice patterns before they form. Not on the chart in yourself. You sense the hesitation before it appears. You feel the greed before it grows. You recognize the bias before it blinds you. That's what self-awareness looks like in practice. It's not about knowing what will happen next. It's about knowing yourself well enough to stay steady when it does. Trading is not a battle with the market. It's a dialogue with your own perception. The more honest that dialogue becomes, the clearer your vision gets. And when your vision clears, you no longer need to be right. You just need to be real. Because truth, not prediction, is what keeps you consistent. At some point in your journey, you'll stop asking the market for certainty and start asking yourself for honesty. You'll stop trying to know what's next and start learning to see what's here clearly without illusion. That's the shift. That's where trading becomes more than profit and loss. It becomes a practice of awareness, a mirror for your mind. You'll realize that every bias, every emotion, every impulse to rewrite the past isn't a flaw to erase. It's a signal, a message, a reminder that you're human and that being human doesn't make you weak. It makes you aware. Because when you stop lying to yourself, you stop fighting the market. You stop chasing the perfect setup and start building the perfect mindset. One grounded in truth, in process, in humility. That's how you grow, not by knowing more, but by needing to know less. By accepting uncertainty as your teacher. By finding peace in not knowing. And by learning to look back without rewriting the past. This is how you free yourself from the weight of false wisdom. This is how you begin to trade from a place of awareness, not illusion. So the next time you review your trades, don't ask, was I right? Ask, was I honest? Because honesty is the real edge. It's the edge most traders will never have, not because they can't, but because they won't look that deep. But you can. And if you do, you won't just become a better trader. You'll become a clearer human being. This is Mind Over Markets. And this is where self-awareness becomes strategy.